We have big tech earnings starting today, and we need to talk about it. I am Dr. Stock, Doctor of Education, and do you suppose that sea creatures watch the news to keep up with current events? All right, in the after hours today, we have Google, we have Microsoft, we have AMD. We need to talk about those things. We also have Starbucks. I'm going to throw that in there with big tech. Why the heck not? I think the technicals are neat to look at for that one, and we could totally see that pay off big time for us. Also, Tesla moving in the pre-market hours. We'll throw that in as a bonus as well. And I will tell you later in this market where you can see my buys and sells and how I'm playing this market, about my options course, and how you can learn to do technical analysis like I do in order to benefit yourself in the markets. So one quick reminder here, Jolt's job openings today at 10. That is going to be a huge market catalyst. Be on the lookout for that. That jobs report coming out before the results of the FOMC meeting tomorrow. It will come out during the FOMC meeting today. So that is absolutely worth paying attention to. With that said, let's get right into the charts on this thing. And we're going to kick things off with Google. So Google, check this thing out. Here's the run that we've been on, going from when we bottomed out into 2022, into 2023, had a wildly successful time throughout 2023. And then we entered 2024 and man, things just took off for us. So what exactly are we seeing? I still think that we have a lot of really positive news for big tech being priced in already ahead of earnings, which makes me wonder if we're going to see a surprise to the upside for each of these tech stocks as we talk about them. If we do for Google, we have room up to about $163 per share. So we would be watching for that price to hit, and then I think there could be some profit taking that would follow it. Now, mind you, if we sell off into earnings that the earnings were already priced in, that is one that we could drop back down onto here. For Google, we're looking for strong advertising spend, and we're also looking for progress on AI to hopefully get some announcements there and to get some excellent forward guidance for 2024 that we have reasons to stay bullish on big tech for their outlook. Most likely it's going to come with some big spend numbers, so we'll look for that for revenue forecasts, and then we'll see how that also affects their bottom line, which if AI does what it promises to do and brings in the efficiency that it could definitely bring in, then that's some area where we could actually see preserved earnings per share for 2024. So for Google, that bottom line, should we happen to drop off of earnings, I think it comes in at about 147. So we do also have this trend line to pay attention to, which we have broken above. And so with that said, following earnings, that shows us at about 150, by the way. But should we break through that, we have 147 to catch us, sort of as a safety net for that one. Moving on to Microsoft. Microsoft, we absolutely want to hear about their progress with ChatGPT, with their AI integrations, what they have looking for Copilot, how they plan to capitalize on it, and also what their revenue forecasts look like as well, and what their aggressive spend looks like on AI, and how that translates into bottom line numbers as well. With that said, for Microsoft, we could go up to that 430 number from 412 at right now. So about 4% up from where they're trading at in the pre-market hours. And where's that bottom line on this thing when we're looking to the south side of this? About 385 is where we could drop to should we sell into those earnings. And if we do see that sell from those earnings, that's also going to drag the market with it. We need to keep that in mind because big tech has been a big part of the rally moving on, especially where the NASDAQ is concerned, especially where the NASDAQ 100 is being concerned. So we have to keep on watching for that to see what exactly happens for us. So we already have the expected good news priced in. Anything beyond those expectations is what's going to be able to move us up even higher. With that said, AMD playing second fiddle to NVIDIA. So can't get enough NVIDIA parts. AMD is a very competitive brand, and it is one that has made a name for itself over the years. I've been a customer of AMD back in the days when I used to build my systems. I still think they put out a lot of high-quality parts. The market seems to think so as well. Will they catch up to NVIDIA? So for that thing, we're going to have to watch that. That's going to come out more through their tech announcements, more so than their earnings calls. But that's something we're going to watch for their earnings forecast. Good news for AMD for the earnings forecast, by the way, is also good news for NVIDIA earnings. So we want to be watching for that. So if we see strong demand, strong growth coming for AMD, that means probably even stronger demand, the same demand, I should say, coming for NVIDIA, or possibly even stronger. We'll see for that as well. But should that happen, I think that could be a definite catalyst for NVIDIA stock as well. So as a secondary movement to that, or a reaction to that. So what do we have building up for AMD? This one, if we go down to the hourly chart, we can actually see, if I zoom out here, that we actually have a bit of a bull pennant building up, which could be made or broken by the earnings that we have today. So where does that put us? Should we move to the upside on this? Well, we have up to 190. And if we do pop off of our earnings, the technicals actually suggest that beyond that 190, that over the time in the coming days, following maybe the coming weeks, we could even see 200 coming out of AMD. So to the top side, we want to be watching for that. To the bottom side on this thing, I think we could drop back down to about 165. So that's what we want to be looking for AMD coming out of their earnings. Now, Starbucks, I know they're not big tech, but they do report in the after hours, and we have a bit of a double bottom happening here. So should we get bullish news from Starbucks coming from this, this is one that could continue that bull pattern that puts us back up above the 50 and the 200 days that we have on here. So the 50-day is this one right here. It's curling down this way. The red is the 50-day EMA that we're looking at. We're below both of them. We're also below the 200-day. So that's a lot of bearishness for Starbucks. Their earnings are coming up. We need to look and see what's coming for them. Like I said, a bullish move off of earnings for Starbucks could lead to further bullishness, and we would be watching for that one because that could lead to significant upside in the near term following those earnings play, which can be a bit of a coin flip. Now, mind you, pricing power is going to be a big thing for Starbucks. How much can they keep on raising the price of the drinks? How much more efficiency can they squeeze out of the company? What buildings do they have going on? Is there more construction coming their way, or are they slimming down some of that spend that they have? We're going to have to watch and see what comes for Starbucks. I think the play for Starbucks is after the earnings happen that we watch and see what happens, because that can either make the bullish move based off the double bottom, which I think would be the most favorable thing for us to take advantage of, or it could possibly break us back down and we could retest these lows down near $90 per share, maybe even breaking down through that support. Should we drop off of earnings instead? We're just going to have to watch for that one. Now, Tesla. Let me pop Tesla up here. And for Tesla, I had their stock price prediction and earnings projection, 195 trading at in the pre-markets. It might be off some of that Neuralink news that we saw, also coming off of some of that softness that we got off of earnings. I think people are taking advantage, buying the dip off of this. We know Kathy Wood is most definitely buying that. I bought some of it as well. I think other long-term investors also buying into Tesla off this oversold status that we have right now. So this is one we absolutely want to keep watching. By the way, 200 is not only a round number resist that we want to watch out for on the way up for this thing, but it is also the first Fibonacci value that we have coming off of the bottom that's down here. So with 200 having that, we could most definitely test 200 and fall off of that one. So we're going to be watching for that for Tesla. Whereas the 200-day, is way up here at about 230. And then where do we find the 50 days? Well, the 50-day SMA for this is 235-ish, a little bit below. And then the 50-day EMA, which has a greater reaction to more near-term price action that we see, that's 227.84, almost 228 when we look at that. So if you guys want to see my Tesla stock price prediction and earnings projection, I will be updating that, and I'll be putting that up over at the Patreon based on the last earnings that we saw. So you can go over and you can see that when I do that update. You can see the previous one that I put up there. It's up there already with the video commentary from before the earnings. Now that we have the earnings, I need to update that. I will also be updating my NVIDIA stock price prediction and earnings projection this month. So today's the 30th, the 31st. So within these next 2 days here, we'll have that put up on the Patreon as well, that you can see what I believe is coming for NVIDIA, and in AMD earnings are certainly going to be influential in that. So I'm going to be seeing those results as they come out and put those into my projections that I have for NVIDIA. If you want to learn about options, you can do that using my options course, which is also part of the Patreon. Links down in the description. And if you want to learn about technical analysis and learn to up your trading game, you can do so by using the link down in the description. Massive discounts if you use the coupon code TRADE, TRADE. Only alive for a couple weeks yet for that coupon code, so make sure that you take advantage of it soon. All right, let me bring that down. We'll put Tesla back up here. So where do I see Tesla going? So should we retest 200 and we fail off that one, we can actually come back down. We can revisit 185. We're going to be watching for that. If we break that resistance, 175 is there to catch us. And then down below that, I think the ultimate low, should we push down this far on this one? Now, mind you, I think it also takes the market bias to go with it. If you watch my video from yesterday, I also mentioned about the Fed and how they'll play into this, but that ultimate low, I think, is right around 167. Now, in terms of Tesla and the Fed and all that kind of stuff, Tesla interest rate sensitive, please keep in mind the Fed meeting results come out tomorrow, and, well, I'll tell you what, it is a super, super unlikely event and long shot that we get a cut, but in the event that we get sort of surprised by that, I wouldn't be surprised at all if Tesla were to rubber band off of that. Also solar stocks also to rubber band off of that. So we would be watching those things in the event that the Fed does something highly unexpected and does that rate cut in January. Now, mind you, I think as the market digests that, that could be something that could be also interpreted as a negative, even though we might get that sort of initial pop off of that sort of news. And so the market might wonder why they did that. And then Jerome Powell's commentary would also support that as well. Now, the more expected thing is that we don't get that rate cut. The more expected thing is that we get further flavor on what could possibly happen in March and what the Fed is looking at in the next few meetings that we have coming up. And we want to move from that coin flip scenario that we're at right now for March for the rate cut or staying where we're at right now. We want to see which way those scales tip. If they tip towards no rate cut in March either, that's going to be tougher on solar stocks. It's going to be tough on automotive stocks. We want to be watching for that. If it does tip the other way, that it's making it look more likely that we're going to get those rate cuts happening at the March meeting. I think March 20th is when we get those results. Should that tip the other way to the rate cut, that is also something that can be bullish not only for the stock market, but it can also be something that is bullish for Tesla and the solar stocks and other automotive companies that would go in there besides Tesla as well. And I know I keep on calling Tesla an automotive company. It does move based on the automotive side of things, based off of EVs still being that main revenue driver. So please keep that in mind as to why I'm referring to it that way. All right, guys, let me wrap this thing up. So big tech, we want to watch and see where it goes. Should we launch off of these things off of earnings and we maintain into tomorrow? I think that we're in good shape for further bullishness in the markets. If we sell coming off of earnings for any of these companies, or I should say especially all of these companies, then we know that those positive earnings have already been priced in, and now we're starting to see a little bit of settling, a little bit of profit taking off in that, and the market's probably going to retreat a little bit. So the big tech earnings are going to be a big indicator of the direction of the market, and it's why I wanted to bring this video out to you. So thank you very much for watching. I really do appreciate it. Check out the link down in the description for the Patreon. Check out the link also for that technical analysis trading course. Don't forget about the coupon code TRADE trade for those massive discounts on that one. As always, guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.